Hello, good evening traders. Welcome to another video of my whole learning series. So in this week, I'm going to touch about another very important topic. So I hope you would have benefited out of the first two videos that I have posted. You can watch those in my Facebook page, facebook.com/skmvptrader. If you have not, please do so. And today I'm going to talk about another great topic. More often, we are very focused on when to buy a stock. Am I right? We always think about, okay, is it right time to buy? But what we miss most of the time is when to sell. I think most of us can agree that when to buy is equally important as when to sell. So in this video, I'm going to take a real case scenario about a stock, which is most of y'all probably would have known, CAT or Caterpillar. This is a stock in US stock market. So the topic here today will be how most traders would have only made 10% instead of 100% profit from Caterpillar stock in this recent bull run. So this is why when to sell, or in other words, they call it profit taking strategy, is as important as entry strategy. Why? Because when we go and buy a stock, when do we go and sell? Have you ever thought about it? We have been taught so many things, like many traders are being taught sell at resistance and stuff, which I'm going to touch about shortly. But today is about how you are able to ride a rally. So this brings me to the most important part, which is when to close your position. Profit taking strategy. We are always told that in technical trading or in stock market that you must keep your losses small and let your profit run. What does it mean? That means when a particular trade go against you, you should close it for a small loss. And when it goes in the direction that you want, okay, let's just say you bought a stock and it starts going up. So they say, let your profit run. That means let the stock keep rising. Don't close it. But what they don't tell us is when eventually we should close it. Because until we close it, there's no real profit. That's only what we call as paper profits. Only real profit really matters. So in this case, how can you actually let your profit run? I'm going to introduce to you all what is the usual way that is being taught in technical analysis, which is concept of sell at resistance using candlestick pattern. You can see over here, sell at resistance using candlestick pattern. I'm going to show about this in a real case example, and I'm going to show what is the biggest weakness in this system. One of the biggest weakness is what I call as premature exit. That means you actually sell your position. You probably would have bought at the right price, a really good price, you would have bought it. But if you have used this concept of sell at resistance using candlestick pattern, there's a high possibility that you would have sold your position or you would have exited your position before the real rally takes place, before the stock really multiplies by 10 times, 20 times or whatsoever. You would have already closed, only for you to regret that, oh my God, I have actually sold it too early. Why did I do so? How can I avoid such situation in future? So a good profit taking strategy should not exit too early and at the same time not too late. Because if you exit too early, you would have missed most part of the rally. And at the same time, if it's too late, you don't want to give up all your paper profits just to end up with very small profit again. So how do you balance between these both? This is one of the most important criteria when you are trading your stock market. You can never escape this. So I'm going to show a real case example over here. So I'm going to take a Caterpillar stock, as I've mentioned in the topic, and I'm going to explain what usually traders does. So this is back in 2016. So what most people are taught to do is this. Look at indicators. You all know, as I've mentioned in my previous video, as MVP traders in my methodology, we do not use any technical indicators. So let's just do that. Let's just assume you're going to trade using indicators. So this is what we call MACD. Okay, you can see the histogram, you can see the two lines, and it's usually thought that when this blue line cross above the red, or they call it MACD crossover, you can see over here. So when there is a crossover, they say go and buy. All right, so let's just do the same. Again, remember, I don't use any technical indicators. This is just an example what most traders does. So crossover, we go and buy. So it actually crossed over at around this level. So just assume we go and buy at 72. So let's just assume this is the price level that a trader went and bought, $72. So now he knows that he bought at this level. The first thing that any traders does is they will mark what they call as the resistance. Where is the last price level, the highest price, previous highest price level before the stock start coming down? So this is the level just around 79.80 where the stock price started coming down, right? So resistance. So a trader would have said, okay, now 72 I buy, 79. So that gives me a profit potential of $7 to $8. Okay, so that is about 10% profit. So he says, okay, good, I bought this stock right now. So okay, so now I hope you all are following me. So because of the technical indicators, we bought $72 and our profit potential we are talking about is $79. So good, everything looks fine. So we go from day to day. I'm going to just move in, all right? I'm just going to give you a real case scenario next. All right, nothing much, no problem. Again, nothing much. It tried to go down, it came back. We are safe. Wow, starts going up again. Another boom. We are really confident right now. Our trade is doing well. We are going to keep this. We're just being very happy. Another day up, another day up. This is really gives a lot of confidence to any traders, am I right? So we bought it at a good price. We use the technical indicators. The stock starts moving up. Then finally, it came almost close to our resistance over here. Am I right? Again, a good move up. We are really feeling good right now. We feel like a genius right now. Am I right? Okay. So we already saw this, and then we move forward. The first down move. So we'll be thinking right now, it's already close to our resistance, almost touched it because the high of this candle was around 78.7. So here is where we will be thinking, I bought at 72. This is resistance. I should be selling right now. Okay. So maybe we are confused. We are mixed up. We're not sure what to do. And then we look for the next day. Pump, another gap down. The price went down. Most of us, most traders would have just, oh my God, I don't want to give up more of my profit. It touched resistance. This is a bearish candlestick with a gap down, which is bearish in technical traders terms. So I go and sell. Okay, 76 for an example. We sell it at $76. So that is about $4 profit. So it is about 5 to 6% profit. Happy, we made money. Am I right? So probably some traders, or y'all might be saying right now as you're watching this video, you'll be saying, hey, maybe I won't sell. Okay, another down move, 3 down bearish candles. Maybe you say, no, I'm not going to sell. So again, you're still stubborn, you're not going to sell. You're almost back to the price that you bought, still don't want to sell. Then you have another, what some people call it as a doji. Doji in this case looks bullish, all right? So we go on, another hammer candle up. This time you will be thinking, okay, good. Thank God I did not sell. Okay, some probably 50% of the traders would have sold here for 5 to 6% profit, and then some choose to hold, and then again the same scenario. Go up, flat, go up again, coming back close to the resistance. Bam, we have this down move. Almost every single traders, all right, almost I could say like 70 to 80% of the traders would have freaking out based on this down move, they would have got scared. They said, oh my god, it just dropped. I'm going to sell. No matter what, I'm just going to sell. I don't care anymore. So what they will do, they will just the next day, they will try to liquidate their position back to their bought price even further, because now you're looking at a loss. So this would have happened to most traders. Okay, they would have looked at resistance, they would have looked at candlestick, they would have looked at gap down price, they get freaked out, they get scared, they got worried, and they sell their position. But this is the amazing part. If in actual you would have bought this stock, Caterpillar, with or without an indicator at $72, if you would have had the right profit taking strategy, if you had a right way of staying in a rally, let me tell you where this Caterpillar stock would have brought you. I'm going to zoom out and show you. If you would have bought at 72, this is what you would have actually been profitable. So we bought at this blue line at 72. Okay, it kept going higher. You maybe think, oh, this is the right place to sell. No. With MVP profit taking methodology, with the right strategy that I'm going to share, this whole secret known to very few of them, where you will be able to ride this whole rally without ever needing to take any profit. Again, remember, this blue line is where we bought. We are going to stay in this rally until this takes place. Again, 72 up to this price level of roughly 160. This is when the profit taking strategy, the MVP profit taking strategy method actually showed that it's time to sell CAT stock. This is the beauty of having the right profit taking strategy. Instead of making a small profit of 7 to 8% over here, or even at max 10% over here, and getting scared based on small amount of price drop, we miss out this whole profit that stock market actually wanted to give it to us, but we did not take it. So this is where I have proven that with just normal sell at resistance, it just doesn't work. You need a much better profit taking strategy, ability to stay in a rally despite the up down move, how to not get scared by the market movement, how to stay and eventually ride a rally for almost 100% profit in this example, and close it when the market says, okay, now is the time to close it. And all it takes to decide and stay in such rally is just within minutes. You don't have to do mega analysis. You don't have to check all kind of indicators, take out all indicators. Basically, with a simple method that I will be sharing in this coming MVP workshop, I will be showing this secret. I will be revealing to all students how you can stay in this rally without any indicators, without getting scared in the market. Okay, so that is why I said I have just shown you example how not to exit too early and not to at the same time not too late, because any method you don't want to be holding here and then end up taking profit here. That means you'll be losing a lot of your profits. The similar case to McDonald's, how to stay from 130 up to around 170, how to ride this whole rally. This I will reveal in this coming workshop. So remember, it is not only important to know when to buy, it is equally important to know when to sell. So this secret on how to stay in a rally and take a profit of almost 100% from a stock like Caterpillar, I will be revealing it live, and don't not miss this. Okay, so I'm signing off. Senthil Kumar Elias SK. See y'all in my coming workshop. Thank you very much and have a great trading day, trading month, and trading year. See you.